Hey folks, happy holidays. It's Liquid here, and a couple of weeks ago I put out a warning that the stock market was probably going to fall lower. There were many signals that the S&P 500 was in overbought territory, at least short term. One major red flag was the market bounced off a very prominent resistance line, and that usually means we're going to get a sell-off in the markets over the next few weeks. So I put out a video explaining how to buy a put spread, a low risk way to make money when the market goes down. Once again, this most recent situation, we have a green candle followed by a red candle. So what do you think the next two candles are going to be? My guess is probably down. So that video was from 2 weeks ago. Let's fast forward and take a look at what the stock market did. And now we are here down to 283 roughly. So two red candles down. Now, part of the reason is just luck because the stock market could go in either direction, but this was the most likely scenario because in the past we had a hard bounce off the top and then that was basically followed by three red candles. So I was kind of expecting the same thing this time, and I was actually expecting it to go a bit lower to about 375-ish. But it looks like it did close the week higher to end at 382.9. So that's how you can sort of look at charts to make better decisions about what the stock market might be doing moving forward. Technical analysis isn't 100% accurate, but you can definitely find repeating patterns throughout the history of the market. And even if the patterns work out 60 or 70% of the time, then if you do that 10 times, you'll be right 6 or 7 times, wrong 3 or 4 times, so you'll still end up ahead. That's the theory anyway. But in any case, let's try to figure out what the market might be doing over the next week, which is the final trading week of the year, and going into January. So because this last week the SPY ended with a doji, it means we're probably not going to get a really dramatic sell-off over the next week. As you can see in previous times where we had a dragonfly doji over here, the next week was very green. Also kind of over here where there's a long bottom wick, the next week the stock market went up and we had actually a couple weeks of green before it was rejected off the EMA, this blue line. Now, I wouldn't expect a lot of volume over this next week because it is the last week of the year. Most people are done trading, and a lot of people are just taking, the last week of the year off. Also, the 26th, the Monday, is a holiday to recognize Christmas, which is on the 25th. So it's actually a short trading week, which means if the stock market, if the S&P 500 does go up, I don't think it's going to go up much farther than this point here around 390, which is where the EMA is. You can see in the past it tried to go above it, but it got rejected before breaking out. So I don't think we're going to see a breakout right away, especially when the last week we broke through that on the downside pretty harsh. And because the trend overall, this channel over here in the short term is still going down, I would expect next week to be down as well. Although we could see one of those patterns where kind of like what happened in August where we had three red candles followed by a green candle before more red candles. So we can have 1, 2, 3 red candles. The next week could be a green. But like I mentioned, it probably won't go above the 21 moving average before going back to a red candle the next week. So we're most likely either going to go up a bit and then down, or we're just going to go straight down. And I think the next target is probably around this level here, and we're going to hit that sometime in January of next year. So around the 360-ish level, which will be a retest of not only the previous lows, but also back to the June lows as well. And that makes sense because it's basically the middle of this channel. If I put this arrow over here, you can see that's the middle of this downward bear channel that the stock market has been in over the last year or so. At this point, I think for the next few weeks, there does seem to be a lot of pressure going down. So I would expect January to be another, if I go to the monthly chart, here we have September, which was a really bad month. October, November were both positive. December, back down. I would expect January to be down again to retest this 360 level here, because we just bounced off of the top of this channel. So it's more likely that we'll come back to at least the middle of the channel before going back up and retesting the top of that channel again. And in a very bearish case, we could go all the way down here to about 300, which is the bottom of the channel. But that's probably not going to be anytime soon if that does happen. If we get more sell-off next year, and let's say the stock market goes to the low 300s, for example, around this level here, then I would probably be a pretty aggressive buyer because according to analyst estimates, Wall Street forecasters believe that the stock market will end next year at around 4031 for the S&P 500. So basically for the SPY, you're looking at 403. The average is 4,000, which is not that high from where the market is today. So if you're thinking like, is the beginning of 2023 a good time to be aggressively buying in the market? I'd say probably not. So if you are one of those people that, come January, you like to just max out your TFSA or your RSP right away so you're done with it for the rest of the year. Yes, mathematically, if you do that every year, investing a lump sum at the beginning of the year should give you a higher return overall than dollar cost averaging throughout the year. But I think in 2023, it's one of those years where you might want to be a little bit more cautious with how you're putting money into the market. Because I think there's a real chance that January will not be the lowest month of 2023 for the stock market. And speaking of 2023, I will be starting a new challenge with the S&P 500 where I will be using options to try and beat the index. Mostly what I'll probably do is a combination of the wheel strategy and iron condors, trying to buy low, sell high, while at the same time earning regular short-term premiums. And I'll have more details on that coming up soon. So if you like my Google's options challenge so far, which I am not doing very well at right now, then keep an eye out starting next week when I start doing the SPY challenge. Anyway, good luck with your investments for the rest of this year and into the new year. And remember, if the market is stressing you out, just take the last week off. You don't have to do any trading or any buying or selling unless you need to for tax purposes. But otherwise, it's totally okay to ignore the markets for a week and enjoy the holiday season. Thanks a lot for watching as usual, and until next time.